Hi and welcome back to another trade review. Today's lesson is mainly going to be about ideal breakout setups and compared to non-ideal breakout setups. Why you should only focus on the ideal setups and what I have learned from my mistakes from today's trading. So let's get right into it. I started to trade with HTGM, and this is the yearly chart. And as you can see, this is the pattern. This is the stock with the non-ideal breakout setup. Initially, this area right here at 470 or 460 could be considered as a good breakout level due to the fact that it topped out around 455 and then had a very long time, or not a very long time, but some serious times of consolidation and thinking time, and what I should say as resting time before hitting this new high and setting up a new resting day and then eventually breaking out. So this is somewhat of so HTGM is, in the bigger picture, the breakout that I anticipated and wanted to buy. Is a non-ideal breakout, but this, as I show you here, at this 570 break is somewhat more ideal. Factor 1, major volume, consolidation, big consolidation. Small consolidation, and then another big run up. That is the key of the breakout. But what I anticipated and what my biggest mistake in this trade was that I was seeing this on the end of day chart on this day on the breakout, and I was quite bummed that I missed this breakout because it was such a clear breakout for me. So I was keeping this on my radar, and I wanted to see if 550, the new high, due to the fact that it's major volume, could have another test and another break. So it had a consolidation day, then another test, very nice, and then today it tried to break out. But here's what I did wrong on this, and how come this is not an ideal breakout, you might ask. If you zoom back, we have this gap up window, and guess where the resistance is? 597, the low of day. You can see it up here. So 597, low of day, and this has even more major volume. So this is a very key area. So what I'm looking at is a breakout potential from 550 up to maximum 6, and that's gonna be a big struggle at 6 because due to the fact that the major volume, and due to the fact that it's a gap up window, it's a technical pattern. Even though I do not trade off those so much, you need to have those in mind because other traders do. So this is a non-ideal pattern. Due to these factors. But although I did trade this today, and it's in hindsight, or now that I have made my trades, that I see my mistakes, and it's very good that I do these reviews so that you can learn and that I can learn, and that I can develop as a trader, and eventually becoming much better at this. But I think it's fun to vlog, or not vlog, but to have these in store, so I can go back and refer to that I also was a newbie once. So today I saw this somewhat of morning spike, morning ramp. It consolidated somewhat. It had a fast morning spike, or not a fast morning spike, but it has a fast morning spike up to this 550 area. The red line is 550, so that's the initial breakout area. So it had a fast spike up to this. I did not know how to tackle this due to the fact that it had consolidation. it had consolidated before doing this run up. So what I did was that I did something good in this, although it's a bad trade in overall. But I saw that this was a fast spike. So what I wanted to do was that I entered at the 550 area ish, 552, and then or even 555, and then due to the fact that I saw that this was overextended and too fast of a spike, I wanted to buy dips, and this is something that I did as this got its first pullback. But then eventually I saw that the pullbacks didn't stop, and this to me is a very bearish pattern when the pullbacks continues and doesn't have a certain area where it stops and holds, because it made lower lows and lower cracks. So I ended up stopping up, I think even up here. But then what I did, I still had this on my radar. I wanted to see if it could test the high of day, because this is a breakout pattern-ish. It's another breakout pattern that if it's too fast the first time, let it test it the second time and see if it can break out convincingly then. Very discussed in Trading Tickers, amazing DVD, check it out. But anyhow, I saw this, I bought a high of day breakout at 666 maybe, the high of day is 663. Once again, it got stuffed up here. It had these, once again, lower lows and the cracks below the previous pullback. So the previous pullback here is 550, then it got down to 551 at one point, and then I saw, okay, this is not able to hold its bottom or its pullback. So I got out simply, and that's a very good lesson. You need to adapt to the stock, even though my plan was to cut losses at 547 due to the pullback before this within this consolidation area. I saw that this couldn't decide and couldn't make convincingly a consolidation area that held up. So what I did was that I adapted, simply adapted, and did cut my trade. And in the end of day, it's not end of day even, but as at this point of the day, in the power hours, you can see that I was dead on with cutting my trade, because it's getting crushed. So eventually this is also a good short, and when I get my account bigger, I'm going to short these failed breakouts, that's for sure. But now talk about if you compare this HTGM, the yearly chart, and the non-ideal breakout, why this is a non-ideal breakout. To summarize it up, it has overhead resistance. That's the biggest part. The 590 and 597 is the biggest part why this is a non-ideal breakout. It still has this consolidation area, which is very good. It has the major volume. It has the two tests. But what makes this a non-ideal breakout compared to FUSC is that it has overhead resistance just above, or 50 cents above. So the main lesson is to adapt to the stock and adapt to the market, because it's the one in control. It's the one that shows us where to go. It doesn't care what you think or what your plan is. And secondly, focus on ideal patterns. Do not get satisfied with these shitty looking yearly charts. And I know I'm for certain not going to do this mistake once again. And I think that's it. Hopefully you learned something. I sure did. I'm not going to trade bad looking charts anymore. Peace.